Of course, everybody keeping an eye on this roller coaster of a ride in the stock market that everybody is going through. A lot of people keeping an eye on the retirement plans and things like that. But how do you survive the markets in the time of COVID-19? And with that in mind, we're going to visit with a very special person, Andrew Dorr from Insight Wealth Group, joining us right now. And boy, oh boy, this is the most interesting time, isn't it, Andrew?
It is. It's been a sporty few weeks. There's no question about that.
A sporty few weeks. I have never heard it phrased like that, but you are exactly right. But as of the last couple of days, the last 48 hours or so, people are starting to receive some assistance. We want to talk a little bit about that, what the feds have done with the CARES Act and what that really means for the economy, if you can shed some light on that.
Happy to, Lou. I think it's, yet to be determined to some degree in the sense of, money is starting to arrive. How quickly are funds going to continue to arrive via the checks to households, but also through the programs like the Payroll Protection Program, which are going to be very important for small businesses. But I think the big point is, even if you look at some of the worst GDP projections for Q2, Goldman Sachs is saying roughly a $1.5 trillion hole being blown in the economy. What the Fed and what Congress have done in the last several weeks has probably been worth up to $6 to $10 trillion. So they've put a very big patch on this hole, and hopefully it will hold.
Okay, so you just mentioned the numbers here that people had to really grasp. You said that they are expecting about, say, a $1.5 trillion hole in the economy, but the amount of effort that's going toward fixing that or helping that is close to $10 trillion. Is that right?
It depends on exactly how you calculate what the Fed can do, but yeah, somewhere in the neighborhood of $6 to $10 trillion. It's substantial.
Now, is you think your own personal view and your experience, do you think that's going to carry it and make sure the ball continues to move forward?
We hope. I mean, I think there are a lot of unknowns in the sense that how quickly can the aid get out? The point I would make is that the aid has gotten out much more quickly this time than it did in 2008. Congress has acted much more quickly. The Fed has acted much more quickly. So we're hopeful it provides a backstop. I don't think it fixes everything, but hopefully it provides a backstop to the market.
Okay, I like that term backstop as well. Now, say that this helps the economy continue to move in a forward direction now or get back going in a forward direction. Is there more money you think that might be needed down the road here?
I think we have to assume that's possible. If you look at, I used the Goldman GDP number. If you look at GDP number projections, you could drive a Mack truck through the spread of what everyone is projecting. What we don't know yet is, when is the economy going to get back to work? How quickly will it get back to work? And frankly, are people going to participate in the economy when it reopens? And that's what's going to determine what extra help is needed down the road.
All right, so you're saying this roller coaster ride isn't over yet?
It's not. No, I think we have to admit I love the euphoria in the market for the last week and a half here or so, but I think we have to assume there's probably another leg down, and we have to prepare for that. Okay,
now from an investor standpoint, what are some suggestions that you have for investors?
Number one, keep your head down. Now is not the time to panic. Usually the worst mistakes in portfolios are made at times like these. You can't be smarter than what's happening on a day-to-day basis, because what's happening on a day-to-day basis is not necessarily logical. And so go get good advice, listen to them, don't panic right now. We'll look back on this in 6 months or so and realize we made it through it.
Yeah, because some people are doing that, and we know that, Andrew. Some people are panicking and they're starting to sell everything, but now is not the time to do that. The time to do that was a while ago, right?
The time to do that was last summer. Yeah, you missed that one by about a year. So it's too late to do that now. So now you need to keep your head down and plug through.
All right. So as long as you do have some good plans in place, then everything will be just going the way that it should be going. And that's what you're saying here. Just don't freak out.
Don't freak out. Yeah. I mean, we have to remember, it's the market down roughly 15% from its peak right now. This isn't 2008, right? 2008 was much uglier than this. We've reacted more quickly with support. The economy is in a much better place going into this. This sucks. It's not fun, but ride it out. You'll get through it.
Now, you guys have weekly commentaries, too, to help people work through the process, right?
We do. Yeah, we've been sending something out every Monday morning. You can find it at www.insightwealthgroup.com. I encourage you to take a look.
All right. And any tips on any particular area of the stock market people might want to keep an eye on? Not saying pull the trigger on them, but just keep an eye on?
Yeah, I think there's opportunities in energy long term. I think there's probably opportunities in fixed income long term. And frankly, there's opportunities everywhere right now, Lou. Everything's cheap, but wait a little bit in case we see another leg down.
All right. Great information here. InsightWealthGroup.com is where you need to go for more information on that. And again, your weekly commentary, just that same website that we gave you, /insights, will get you that. Thank you so much for joining us here, man. You hopefully made people feel a little bit better on this day.
I hope so. Stay safe, stay healthy, Lou.
Yeah, stay healthy too. Wash your hands, Andrew. Okay?
Will do.
All right, buddy. Take
Thank
it easy.
you.
Thanks, man.